Hello guys, welcome to my YouTube channel. In today's video I want to teach you guys how to do risk management like a professional. Risk management, guys, risk management. Now let's go into the chart. All right, this is on the weekly time frame. What do we see? We saw that the market was creating a series of higher high, higher low, higher high, higher low, higher high, higher low, and this is the most recent break of structure to the upside. All right, so it's okay. On the weekly we are bullish, guys. Do not play with what weekly trends. Do not play with what the trends of the higher time frame. They are very important. All right, lower time frame are just for execution. You have to spend a lot of time with what the weekly and the daily time frame. So here we are what bullish and want to understand what our bias is. Now when I check closely, I see that price goes up, retrace, goes up, and now we are retracing. All right, we are what retracing. Now let's go to the daily time frame to see it clearly. Here on the daily time frame, let's see what we have here. Good, I think it is more clear here. On the daily time frame, I see that price was creating a series of higher high, lower low. You see now, higher high, lower low. That tells us that our bias is what bearish. So we are going what with the what sellers. We are going with the sellers. Now this is the break of structure. This is the change of character. First change of character, then this is the break of structure that confirmed that the move is what bearish. This is the trend line I drew from this point, joining the second touch to create what the downward trend line, telling me that the market is what clearly what bearish. So what are we going to do in a bearish market, guys? You're going to look for what a selling what opportunity. Now this is it here. Now we'll go to the lower time frame. Not really the lower time frame. It's just a kind of medium, you know, to give us an entry reason to what short the market. So this is on the daily time frame. Remember, where was spot that our bias is what bearish. So we'll quickly move to what the 4-hour time frame. Let's see what we have here in the 4-hour time frame. Wow, that is great. Now here in the 4-hour time frame, we saw a recent break of structure. We saw a point of interest. I told you guys that your point of interest is either your breaker block level or your order block level. All right, these two are very important when it comes to what choosing the right point of interest, and not just a random area of a breaker block or order block. It must has a fair value gap. I told you something about fair value gap. This is fair value gap. You see this point here. You see this candle low. You see this candle low, and then this other candle, this other candle low. You see these two, guys. This distance, this space is what we call what a fair value gap. This space here is what a fair value gap. So we expect that what price in the future or later on should what come back from this place, get to this area, fill up this gap, and then what continue our what sell. You understand? That is what we are what anticipating. This is what future trading. So what you do is what you mark at what your point of interest, this order block, and also this is a breaker block level here, which I've already marked out here. All right, this is a breaker block level which I've already marked out, and I'm waiting quietly for price to come to this breaker block area, react, and then I take my short. So for me to take my short, that is when you now go to what the lower time frame, maybe 30 minutes, 15 minutes, 5 minutes, whatsoever, to look for what confirmation before you take your short. Now the problem here is this: I want to take a sell from this spot and I'm waiting for price to come here. So while I'm waiting for price to come here, I will take what the short with what confirmation. But the problem now is I'm talking about what risk management, guys. We are talking about what risk management. Now that we're talking about risk management, see this, you have to understand what risk management is. There is this write-up I have here based from the weekly time frame. Good. Now we have this write-up here. Now when you talk about risk management, guys, what is risk management? I told you guys, risk management is the amount you're willing to risk in a particular trade. If I have, for example, a $1,000 account and I'm risking $100, and I was like, if this $100 goes against me, I'm not going to eat for that day, then that is not what your risk tolerance. You need to understand what your risk tolerance. How much can you be able to risk on a particular trade, guys? How much can you be able to risk on a particular trade? It is very important. Now you understand what your risk tolerance. So you check yourself. I have a capital of $1,000. If I risk $100 and it goes against me, will I still be okay? This risk management, this risk tolerance is what sentimental. So you check yourself and see what is good for you. All right, if it is $10 that is good for you, you take $10 as what your risk tolerance. That is that about risk tolerance. Number 2, you said be consistent with that amount until you have made ×2 of the capital. Now if $10 is, for example, your risk tolerance, always risk $10 per trade. Do not change it, guys. Always risk $10 per trade. Do not change it until you have made profit, and your capital is now ×2. For example, you have a $1,000 account and you have made profit, you're now having $2,000 account. This is when you cannot consider to either, re-strategize what your risk amount. All right, so risk amount will have some persons risking 1%, 2%, 3%, down to 5%, depending on what is best for you. You can say, okay, 2% is fine for me, 5% is 10%. This, when it comes to risk management, guys, it is what sentimental. Don't let anybody out there deceive you. Risk management is what sentimental. So that is that about what staying consistent with the amount of what risk. Then number 3, share your profit. For example, you take a trade, you risk $100 and the trade was what 1 to 5, and you gain a profit of what $500. Is that $500 all yours? No. Divide it by 2, guys. Divide that $500 profit by 2. First of all, you remove the risk amount. You risked $100 to get $500, which you actually got $500. Remove that $100, which is your risk amount. We have what $400 left. That $400 is the profit. So you divide that $400 into 2, which is what $200. $200 is for your enjoyment. Yes, $200 is for your enjoyment. While the other $200 is for the business. Your trade, you're treating your trade, you're trading as a business. It's purely business. Okay, so while you're taking $200 to enjoy yourself, you're also giving the market, the business, $200 to add to what the capital. That is how you grow. If you don't do that, you're just wasting your time in the industry. All right, so this is that about what understanding risk management. Then lastly, here on my list, break even at take profit level 1 and take full profit at take profit level 2. Some persons don't understand what it simply means to break even. Now let me show you guys what it means to break even. For example, this is a clear order block which I just put on the weekly time frame.